How are we, guys? Yeah, last time for the theory, we've been doing reducing balance method. Yes. Anybody who doesn't have the tube? No. Last week, we're on them. I was waiting for you. I'll do your tube before you enter. But, okay, guys. I think I asked you to try question number. What is it? 3 we did at the class. Question number 4. Did I ask you to do 5 as well? How did you go? You didn't do 5? We did put some time on that. Really, yeah. So I think some people had questions with this one, yes? Yep. Some of you asked me questions about question number 4. Right. Okay. So how did you get this, the cost of this non-current asset? Yeah, vehicle was purchased for 24,000, including GST. Yeah. Did you calculate it? Did you calculate the GST on this one, or did you consider it as with GST? Excluding GST? Okay, we can take in that way as well. Anybody did with decimals? No. Okay. And then? Sorry? You rounded it? Okay. All right. So then, first of all, if the straight line method was used in 26, what would be the depreciation expense allocated for the year? Yep. Right. So the cost of the vehicle is 24,000, including GST, right? And then 9,600 is the residual value. Okay. It was purchased on 1st of April 23. What is their balance day? Yep, the last day of the period. 31st of March, yes. So if you are going to calculate the depreciation as of 31st March 24, what would be the depreciation? Yes. Yep. 24,000 divided by 1.1, yes. Yeah, to calculate or otherwise we can say divide by 110 times by 100, which is 22,000. Yes, 818. 21. Right, so this is the cost, yes. And then what's the depreciation expense, guys? So from this one, you take away, yeah, 9,600, and then over 5, which is 2,000. $2,444. Okay. Right. If the vehicle was depreciated from the start using reduced imbalance method 20% per annum, then what's the depreciation for 31st March 26? Yep, 21,818 times by 20%, which is again 2,444, regardless the first year will be the same depreciation. Yep. And then this is for March 31st, 24, yes. Then what do you do? 21,818, take away 2,444. This one times by 20%, yes.
How is it 21,000 times 20%? 2,000.
I'm sorry, hold on.
With 4,000.
So how much is it? 4,000?
4,364.
Sorry, 4,364. Yeah. This one is 3,491. This is for March 31st, 25 years. Right. The next one, what do you do, guys? From 21,818, what do you do? You take away both 4,364 plus 3,491. Then this one times by 20%. Uh, 2792 or 93? 93. This is for the March 31st, 26, yes. So this is going to be the depreciation expense. Right, part C. Explain the effect the change of accounting method would have on the net profit figure reported for year ended 31st March 26. Now, what is happening, guys? So, they were using, what is it? Straight line depreciation for the 31st March 24 and 25. So, meaning, what's the depreciation expense? This one, 2,444 was the depreciation expense. Yes. Then, right, then what do they do? Then the March 31st, 26, they are using reducing balance method, and then they are getting 2,793. Yep. And then what happens? Expense decreases.
Yep.
Yeah, expense increases. Yes. By how much? 351. No, sorry. 349. So what will happen, guys? The net profit. Yeah, net profit decreases.
Well, you said I was important. You said I was also.
Okay, guys, last question. Do you think the owner should change the method used? Explain your answer fully. Yeah, what do you think?
Which they change it to reducing balance?
Yes,
From straight line?
should you change it?
Yeah,
Do you think the owner should change? Yes, why?
because it's for the, because the vehicle itself, it's a machinery, it's got moving parts, so you should be introduced.
Yeah, so can you use the term moving parts?
No.
No. So then don't use it. Then except the moving part, what would you say? What did I say?
The cost of it is allocate more cost and starting to the like.
Yep,
That's when it leads to much revenue
yep.
to match starting and then problem.
Yeah, so basically revenue earning pattern, yes. Right, so we had to mention about the revenue earning pattern, not anything else. Right, shall we write it? So then, should we change it? Should we change the depreciation method? Yep.
Appreciate it.
I'll use an acronym here, guys. RBM.
It's like we finished the contest, like most of the content before we started. I do understand. It's good. Something you need to know, especially when we don't. So questions on the most Isn't she be that she's on. She's empty by shifts. Yes. I've seen her for a lot of years. Yes. The second one, which sounds actually like really not sure how the media. I think it's really one of the one thing. Yeah, it's quite cheap. Yeah, actually did that. You think what's that? Wow, that's it.
Okay, guys, done? Right. How did you go with the question number 5? Anybody who did it? Yeah. Yeah.
Right.
Anybody else did it? Yes.
I did it, but I'll put my hands in decimals.
Yeah, you have wrong it.
Yeah, I don't want.
You'll get marks for the decimal.
Yeah, I still get one with sign.
Yeah, as long as it is closer to the whole number, yes, you should get. But remember, I have told you not to leave excuses. Yeah. So always you have wrong it. Okay, guys, shall we do it? Yeah, you want to read the question first? Those who haven't done. JD, JD, you didn't write the answer? Why?
So I was new.
Oh, okay. Yeah, but you could have written the answer.
And what if you understand what I'm like?
Okay.
That's it, so bad. Last four. So. If you have the solve.
Okay, guys, did you read it? Now, what is going on here? Yep. So look at this one. So Greensboro Garden, they are purchasing vehicles. Policy is to depreciate the business's van at the rate of 25% using reduce imbalance method, right? And if the van becomes unreliable, he's going to replace them. And this is the summary, right? Okay, now what are we supposed to do, guys? Yeah, part A, prepare a table as follows to calculate the depreciation expense for the income statement for the years ended 31st December 23, 24, and 25. And then after that, guys, what is it? Prepare extracts from the balance sheet. So we have to do technically, what is it? Income statement and the balance sheet. Right? Shall we start? Now, what are the years we are going to do? 23 to 25. Okay. Now, firstly, van number one. When was it purchased? 1st April 23, 15,000 cash. Insurance is 200 per annum. So then what's the cost of the non-current asset? 15,000. Okay, let's start. So van one, I'll say V1.
Two months. Balance sheets. 2 months.
Right. So then 15,000, guys, April 1st, 23 years. How much is the cost? 15,000 times by 25 over 100 times by how many months? Yes, how many months? 9 months out of 12, right? So then I'm getting here 2,813.
3,912.
Because why? How many months?
January, February, April 1st.
Yeah, 9 months. Everyone is okay with April 9? Sorry, April, from 1st of April, there are 9 months. Okay? 1st April 23 to 31st December 23. Okay? Right. Then we can do, what is it? Van 123. How much? 2,830.
Do we not use decimal?
No, we don't need decimals.
What?
Okay, you don't need decimal, you are rounding. Right. Then, yeah, now shall we keep going with this one firstly? We'll finish this one, yes? Yeah. When is it going to be replaced? 30th June 24. See, van 3, right? Purchased on 30th 24 as a replacement for van 1. That means we are replacing when? After 6 months. So we will be using this one again for 6 months, right? If you want, I'll put in the vans for 23. How much is that, guys? Cost? Cost is how much? 15,000, yes? Cost is 15,000 for 23, right? Or maybe I'll write here 15,000. Okay, this is van one. Yeah, we will first finish van one. It's easier. Okay. Now for the next year, right? That is 15,000 for the next year, which is actually January 1st, 24 to June 30th, 24. Okay. So 15,000. Right. How do we calculate, guys? The depreciation on reducing balance method? Yes. Take away the accumulated depreciation. So far it is 212813. This one times by 25 over 100 times by 6 over 12. Why? Because see, only 6 months, guys, here. Okay. There are only 6 months. Right? Okay. So then I'm getting 1,523. Yeah. Okay. So that's going to be the expense for the 24. 1523. Right? Okay. That means, guys, we are done with van one. We don't have to worry about van one again. Now let's start with van two. Right? I'll call V2. Right. When are we purchasing V2? So remember this van number one doesn't go into the balance sheet of 24. Why? Because by then we have replaced it. We have sold it. We don't have it anymore. Right? Okay. Then van two, we are purchasing 19,800 including GST. Insurance again not considered. So how much is the cost, guys? 15,000? 18,000. 31st October 23. So October 31st, 23, 18,000, right? Times by 25%, times by how many months? 2 months? 2 months, 2 over 12, right? So the depreciation expense coming, 750, right? So then becomes depreciation expense, guys, 750, which is here. Okay. Now it is going to the balance sheet, 18,000. So then total van cost for the 23 is going to be 33,000, right? And then we'll get the accumulated depreciation as well. So similar to the depreciation expenses. So 2813 plus 750, yes. Which is 3563. Right. Then we can calculate, guys, carrying value. Right? Carrying value. What do? We basically take away 3563 from 33,000. 29,437. Right. Okay, any questions up to here? Up to now, any questions? Right. Okay, guys, now we are going forward with the van 2 until when? Probably until 24 years and 25. Yeah, so then guys, this one we are going to do December or maybe January 1st, 24 to December 31st, 24. So 12 months are there here, right? So 18,000 take away 750 times by 25% fully, right? Which is 4313. Yep. So then 4313 is 24. Right. Then can we include it in the balance sheet for 24? Yes. Which is this is van 2, okay? Van 2. Then this one also van 2, which is cost is going to be 18,000. And then next one is guys 25 years. No, what about the accumulated? Accumulated is 750 plus 4313 years. 5,063. 5,063 years. Yep. Okay. Then when is it going to be replaced, guys? Van 2? September 1st, yes. Because see, van 4 is going to replace the van 2. So then how many months? 9 months? You sure? 9 months or 8 months? January 1st, 25 to what is it? September 1st, 25. How many months? 8, yes, not 9. So 18,000 take away. What is it? Take away 5,063 times by 25% times by 8/12, which is 2156. 2156. Right? So I'll go to the third year, 2156. So that's the depreciation expense for January, 1st of January to September 1st, 25. Okay, then can we include it in the balance sheet, guys? For 2024? No, 25, can we include in the balance sheet? No. We can't include in the balance sheet, okay? All right. So then we don't have to worry about that. Then we are starting van 3. Yes, van 3. I'll call V3. Okay. So how much is the van 3 costing, guys? 19,000 plus 1,500, yes? 20,500. So when is the date? 30th June. June 30th. 26 or 4? I think 24, yes. 24. Right? So which is 20,500 times by 25% over, no, sorry, times by 6 over 12. Why? 6 months only. Which is 2563.
Yeah.
So that's the depreciation expense, guys, for 24 from van 3, 2563, which is here. Okay. Can we include in the balance sheet? Yes. V3, this is going to be 20,500 and accumulated is going to be 2563. We can complete that here, yes, because next one is purchased in 25. Yep, wonderful. So we'll finish it off, guys. This is going to give us 38,500. Right. This is going to give us 7626. So you take it away. 74, 8, 38, 30,874. That's for 24, guys. Okay, it's in 25 section. Yep. Right. Finally, we are going to go, well, V3 done. We'll do for, sorry, V3 24 done. We'll do for 25. So Jan 1st, 25 to December 31st, 25. Okay. So 20,500 take away 2563 times by 25 over 100, which is I'm getting 4484. That is the depreciation expense for 25. Okay. Right. Can we include it in the balance sheet? Yes. Firstly, let's add the total depreciation, accumulated depreciation here. 7,047. So this is van 3, 2,500. And this one again, van 3, 7,047. Okay. Right. Then the last one, van 4. Okay. What's the van 4, guys? When was it purchased? 1st September 25. Yes. How much is the cost?
20,000.
20,000? 22,000? Yep. What is the date? September 1st, yes. September 1st, 25. 22,000 times by 25% times by 4 months, yes. 4 over 12, which is 1833. That's pretty simple. This one we are getting 1833, and then we can do the balance sheet as well. Van 4 is 22,000, and then depreciation is 1833. So I'll get the total here. 44,500. This one is 42. 8,880. Yeah, so you can calculate the carrying value, which is 33,620. Any questions?
Wait, what the trigger are you facing with 2025?
25?
Yeah.
Yeah, 8880.
Asking questions on these, can be juicy. Those are many fun. Yeah, exactly.
How did you go with the other?
Exactly.
Did you understand? Yeah, don't worry, because this is the last two questions. When did you used to call me over to?
Call me up.
Those
You're going to get like start me if you don't know double.
Did you everyone that you see?
I was playing like that. First time I'm like, you go check through the
mean, sorry, you already covered
English, like, that's like, you need so much. Huh? You need so much. But it's fine. But you drink so much coffee and then you drink so coffee the whole day. He, you know, I'm not so Catholic, but you think over the. I'm never usually coffee in the morning, so. But I thought really like fun that you know, he's great.
You need the workings, as
I got the
yeah. So these workings you need, okay? Yeah.
Do you get often working?
Yes, because when they have given if your answer is 100% correct, you don't have to worry about the working, but I recommend you doing working because you'll get at least some marks. Yeah, good.
I think before, actually, I did was the.
What about the full appreciation?
Yeah, you'll have to sum it up. I haven't added the total depreciation, guys. You can add them up, yes. So it's matter of adding. I didn't really add them.
No, it's not. It is lost. So I'll be too much.
Huh? Thank you. All right, guys. Any questions with this? Right. So now we have next week, yes. Yeah, we have the class next week, guys. Week after we don't have. We have to reschedule that one. Okay, I told you. Yep. So then let's.
We did before. Post.
Yeah.
Any paper.
Okay. All right, guys. So any questions with this? So you want to reschedule to next week?
Monday?
Monday?
No,
Tomorrow?
No.
no.
I can't do that.
No, I'm going to jump at you, but.
That's right.
I'm not right. Or it's due Wednesday. What time Wednesday? Anytime.
Right, morning?
Morning.
Morning is better, yes?
Like 10 to 1. 10 to 1. Like 1
Yeah,
year.
English tuition. Yes. I have English tuition on this week. Next week.
I'm going to tuition Thursday. So Wednesday 10 to 1.
Wednesday?
10 to 1.
Everyone is okay with Wednesday? Yep. You can. Then Friday?
Yeah, I can do.
Friday. What time?
10 to 1.
I think last time also we did it on Friday, yes? 9 to 1? 4 hours?
Yeah.
Yeah.
10 to 1. 10, 11, 12, 1.
What?
Hey, come on. Hey. Yeah, it's cool.
Yeah, that doesn't make sense. Yeah.
So yeah,
One doesn't count. I think like military time. 13 and wrong.
yeah. That's 3 hours. What are you talking about?
9 to 1.
I said 10 to 1, man. That's 9 to 1. I'm not waking up that early.
Student 9 to 12. Yeah, 9 to 12.
At that point, you just do 6 to 9 at that point, bro.
Why do you?
Yeah. What is the time then?
9:30.
9:30.
Yeah, 9:30
Okay.
or 12:30.
12:30, 12:30. Yeah. Everyone is okay? Friday. This Friday, okay? This Friday. Yeah. Yeah. So I'll so for online students also, I hope you guys are okay because last
Can I do online?
yeah you
I
can.
think I'm what on Friday.
You can't come?
Yeah, no, but
You can't take an Uber?
Huh?
You can take.
My brother's at home.
I just watching. Why is staying here? What is the fun?
Okay, guys. Right. Then Friday, I'll send you a reminder. Okay. Now we are done with the reduce imbalance method and straight line method. Right. So today we are starting, guys, disposal of non-current asset. Right. What is disposal? Yep. Disposal. Yeah. Disposal meaning we are going to sell the non-current asset, right? We can sell the non-current asset, or basically we are getting rid of the non-current asset in 2 ways, right? So first thing is we are going to sell it in cash, right? We sell the non-current asset in cash, right? Which is quite straightforward, right? The second thing is we trade it in. What do you mean by trading? Yes. So we basically give away our old, let's say you have a laptop, right? That you've been using for a while. You want to replace it with a new one. So what you do is you go to the same supplier and then you give away your old one and you get a discount for the new one. Yeah. Usually it is not favorable, it is not profitable, but sometimes it can be. If you get a good deal, especially when you are going to replace your vehicle, right? Sometimes you get a good deal. As long as you get a good deal, yes, of course you can do it. Otherwise, you can sell it, your older one, at a higher price. Right? So usually some people, because it is easy, they are doing it, they just soak it, right? Otherwise, we can sell it. Either way, that's fine. So we are going to do the accounting for that. But there is a harder part here, right? So it is not like, guys, we are selling inventory, unfortunately, right? Selling inventory, how many sets of double entries we had? 2 sets, yes. One is at the selling price, and the other one is at the cost price. Yeah. So then we had only 2 sets of double entries. But this one, we have, unfortunately, see?
What? What?
There are 5 sets.
Why? Bruh.
Yeah, actually, at net there are only 4. First one is something that I added, right? But added in the sense, don't worry, it is, it's not something that I added new out of the style design. It is there. But basically, I'm telling you, ensure that you have done the depreciation, right? Before you sell it, right? Why do we depreciate before we sell it?
That's like
Yes, we need to make sure that we have calculated the exact amount of depreciation expense so that we can calculate the accurate profit for that period. Also, we are going to calculate a profit or loss on the disposal. That's why we are doing it. So remember, guys, this one we have actually, as I said, four sets of double entries. And the next one, remember I told you trade deed, the second method, you have 5 sets of double entries. One extra. And remember, even if you look at any textbook, you don't have the note like this clear. I don't know. Let's check from with your school if your teachers are going to do like this. I haven't seen so far.
Do what?
I mean, this clear. This methodically, you won't get it the double entries. Okay? Even you don't have it in the textbook. This clear. Okay. So then learn it from here, and then it is actually, guys, if you got it perfectly, that's it. You don't have to worry about the disposal. Okay. Shall we start? Okay, take down. Disposal of non-current asset refers to okay. First step is ensure this is actually not a part of the disposal, but this is a prerequisite. Okay, this is not a step in disposal, but prerequisite. Okay. Ensure the depreciation expense for the disposal. Sorry, this should be disposed. For the disposed on current asset. Yeah. What's the double entry for depreciation? Yes, remember? Depreciation, debit, accumulated credit. Krishan, do you remember? Hmm? Good. So you debit the depreciation expense. of van, assuming this is a van, credit accumulated. Depreciation of van. Why do we debit the depreciation, guys? Sorry? No, why do you debit the depreciation expense? Expense increases. Why do you credit it?
Negative asset.
Negative asset increases. Good. All right. Now I have given an example. Assume a van with a historical cost of 10,000 is sold for 2,500 plus GST in cash, and it had the accumulated depreciation of 8,000. Okay, by the time it was sold. And now remember, guys, in the previous study design, we didn't have GST when we are selling these non-current assets, but now we have GST. So don't forget it. Even though they tell it to you or not, you need to consider GST. Okay? Right. Next one. Transfer the historical cost. This is the this is the first step of the disposal. To the disposal account. So we have a special account called disposal. So we transfer the historical cost. Right? So you debit the very good disposal of van. Why do you debit it? Increases what? Yeah, the van in the disposal increases. So asset increases, debitors, and you credit the van because our van decreases. In the disposal, our van increases, so you debit, and our van decreases, credit. Okay?
The disposal of that, that's a card.
It's a neutral account.
You're not gonna pass it.
No. Remember the profit and loss summary?
Oh, I didn't think it's not
Yes, like that.
temporary.
Account. We have another temporary account called suspense. You don't have it. Yes, suspense account.
What?
Yeah, that is used in the, I might have told you, that is used in the correction of entries when the errors are traced by the trial balance. Remember, in your study design, what we did was errors that are not traced, not identified by the trial balance, but if the errors are identified, then that's where we use the suspense, because there's a difference coming. So that's where we put suspense. But don't worry, you don't have it here. Only in the unit, right?
You don't know vans being credited because of like
We are getting rid of it and decreases.
So you're selling it or like you're replacing it?
Either way. But this one, what did I say? This is the first one we are doing. See? Okay.
So would back wouldn't increase?
Yeah, increase. It will.
But you didn't do it.
Yeah, it to come.
Oh.
Okay, which is the next one.
So it's disposable of van is like
Disposal.
disposal of van is like it's not an asset.
Neutral, yes. Neutral. It's a temporary account.
Where do you record it? Like
Nowhere.
Yeah.
We don't record it anymore. Just a general ledger, you will finish it off. Remember the P&L summary? Like that. Okay, guys. Right, now next one, transfer the accumulated depreciation. Accumulated depreciation is, anybody can tell me the double entry? Accumulated, we have what balance do we have? Accumulated, a negative asset, so it has credit, yes? So then what do? You debit it, accumulated, depreciation, of van, you debit, and where do you credit? Disposal. Okay. Sorry, I should have written the amounts. So shall we write the amounts, guys, here? 10,000 here, right? And this one, how much? 8,000.
What element is disposal of that?
Yeah, that's why I told you. It's a neutral. It's temporary. Neither. Nothing.
Just exists.
But it will come and then next minute it will be gone.
So it's just there to hold the temporary value before you get rid of it.
Temporary. Yeah. Like P&L summary. Okay. All right, guys. Okay. 8,000. We are crediting the disposal. Any questions up to now? Then record the sale proceeds. Sale proceeds means how much you sold it for, right? Including GST. Then we are going to record it. How much did we sell it here? 2,500 plus GST, right? What's the double entry for that? That's easy, yes. Sorry? Debit bank, how much? Yep, 2,750. Credit. Sorry?
So. Wait, no, wait.
Credit.
And we will print yesterday. 45.
GST clearing is debit. Credit.
Is it like a comfort?
Yep. Of course, there is an account.
Like special one, you know?
Yes, there is a special one. What is it?
No.
Okay, yes, disposal.
You just really
Disposal of van, credit. Okay, guys, next one. Recording the profit or loss on the disposal. Now, my question to you. All right. Now, can you tell me if you have made a profit or loss on this disposal? Loss. Sorry? Now, for this question, you don't need to worry about accounting. Common sense, yes?
We made 500 extra.
500 extra
Yeah.
profit.
Because you had a depreciation of 8,000, meaning the value of the asset.
Yeah, so you are saying 500 profit. Okay.
Wait, you're gonna say like 7? No, I were thinking. Wait, on disposal, yeah, no, it's one. Is it one? Which? Wait, read it. Wait, does it say when we bought the van and when we sold the van?
Doesn't matter.
Yeah.
So then we can imagine like we purchased it some time ago. You sold it now.
Because it should be valued at $2,000, but we sold it at 500.
Yes. You smart guys. Yes. Yes, and what do you think? Profit, how much?
Yeah.
500 profit. Yes, good on. What do you think? Profit. Yes, you know it. What do you think? Okay. Okay, because your friend is saying that. Right. Okay. Yes, Christian. Why is it profit?
Because the cumulative depreciations. And most of all, because it's 10,000, it's $3,000 difference. All you're selling.
What do you call the 2,000?
And
Carrying. It's good. All right, guys. Yes, all of you are correct. So that's what I said. Common sense, yes. So you purchase something for 10,000 and you use it for a value equal to
8,000.
8,000. Meaning, what is the value of your asset now? 2,000. 2,000 worth of something is sold for 25. So profit of 500. Yes. That's it. So the carrying value is 2,000. So a van that is having a carrying value of 2,000 is sold for $2,500 profit. So then what's the double entry for that? Profit.
So, but you know that the appreciation yet?
Yeah.
Of $8,000.
Yeah.
Does it mean like it's already happened, or is just like telling us the details?
Yeah. That's already what has happened. That's why I said we purchased the van a while ago.
Yeah.
Right now it is sitting at 8,000 accumulated, meaning carrying value is 2,000. So it's a for 25. Okay.
Yeah.
What's the double entry?
It's debit disposal value.
Debit disposal of van and credit the. Very good. Wonderful. Right. So then, why do you credit it for now? Yes, revenue increases. Yes. If the disposal makes a profit, so what do? You debit the. Oh, sorry, the other way. Profit. Then you debit disposal of van. How much? 400. And you credit the profit. So this is going to be a different account, guys. Profit on disposal of van. You can't just have profit on disposal wrong. 500 van. Why? Because we might have sold something else. We have made a profit for that. So then we'll have, let's say, that one is a computer. So profit on disposal of computer. Like that, we'll have many accounts. Okay, guys. Right. Now, opposite is if the disposal makes a loss, what will happen? There is a small mistake, okay? This one, the other expense should be coming here. Okay. So you're going to debit the, where is it? Loss on disposal of van, whichever the amount it is, and then credit the disposal of van. Okay, if you are going to do the ledger accounts, guys, right, this is how I would show you. This one, the date, don't worry about the date. If you want, we can put a date. So this one, we have the balance, 10,000. Accumulated depreciation, what we were having is another balance. How much? 8,000. Right? Then what do we do, guys? You technically credit the van, 10,000. Same disposal. Then disposal is debited 10,000, saying van. Okay. So van in the disposal increases, you debit it. Vans in the van decrease, credit. I said decrease, credit. Then accumulated depreciation, a negative asset. Yep. This is a negative asset. So we are debiting it, 8,000. Saying disposal. Off van, okay? Off van. And then you are crediting the disposal, 8,000. Sorry. Can it be? It can be on any date, but yeah. So whichever the date doesn't really matter. Saying accumulated depreciation of van. Then we are getting money. How much? 2,500. Bank debit, disposal credit, and then we have a, what is it, guys? So matter of balancing if you want. Let's say if you do the ledger account, you don't have to really worry about what is it? Figuring it out the profit or loss. What do? Matter of balancing. Which side is greater? Which is the credit side? So you repeat it and you have a difference 500. What do you call it? So you are debiting here, crediting somewhere. So crediting means our revenue is increasing, that is profit. Of van. Yep.
Sir, when you reporting the disposal, did you classify that as like going into?
Closing entry. You mean a balanced adjustment? No, not necessarily. It can happen, disposal can happen at any time. Depreciation happen always actually on the last day of the period, but if we do the disposal in between, then that means we need to do the depreciation for that item, right? At least for that. Why? Otherwise, we can't figure it out if it is a profit or a loss. That's why, guys, I included special entry saying ensure the depreciation has been done before you do the disposal. Otherwise, you will forget it. In the future, what happens is you simply forget it. But if you follow my steps, you won't go wrong. Okay? Right. Any questions?
What's like the purpose of the disposal account?
What is right, sorry?
The purpose, like the disposal.
Purpose of the disposal account? Yeah, what do you think? What do you think? What's the purpose of? Anybody can tell me? What's the purpose of doing it?
Transfer that to a profit
To the profit?
on disposal.
Profit on disposal. Anything else? Yeah, you are on the track, but still didn't get the perfect answer. Why do we do it? Disposal account. Because we are jobless. No. And to calculate or to identify the profit or loss on the disposal. That's it. That's the purpose. What's the purpose? To determine whether we have made a profit or loss on the disposal. Yes.
Yeah.
So now see, somebody asked me whether we are going to report it somewhere, record it. Yeah, that's it. Done. We don't need it. Throw it away to the bin.
So we want to do it ledger or profit disposal back. So you want to fill it out.
No, I mean we have to. I didn't show you the ledger account, Yeah, his question is what? Yeah, basically, I mean I didn't draw that one. So you are going to debit the disposal and you'll credit. Yeah, they can ask. Yeah, it is not here. So you can say profit on disposal of van. So you are going to credit it. Yep. 500. Same disposal of.
Slash loss, because if it's a debit, then.
No. We will have different ledger account. No. We don't have like two in one. We have just one. Either profit account or loss account. Then this one, what do you do? This 500.
Transfer this to profit.
Transfer to the profit and loss summary.
Right. Yes.
So this one will transfer to P&L summary. And where do you report this? Profit and loss disposal? Income statement under?
Other.
Cost of goods sold?
No, other.
Other. Not COGS, okay? Don't report in COGS. It's not related to inventory. Okay? So that's it, guys. How did you go? Easy? Hard? All right, yes. No? Any questions? Any questions? No? Otherwise, I'm going to give you a question. Yeah? All right. So we'll do this one, guys. Question number 1. I couldn't tell you, sorry. So if we are going to do, guys, all of these except number 1, number 2, 3, 4, 5 under one source document. You will have only one source document, so that is actually making your life easier as well, right? Because you don't have to write narrations for all of them. Just one. So we're just saying disposing or selling the van for cash, EFT, whatever, receipt, whatever it is. Okay.
You have to go like for all.
Sorry?
You have to go like for everything.
Yes. You can do up to part C. You don't have to worry about the rest.
This is the other depreciation method.
Yeah, that's the reducing management. You know how to do a reducing management? You get the carrying value. How do you get the carrying value? Carrying value, carrying value is
History of the cost.
takeaways, reducing management. You didn't watch my video? Fine.
Was that one also?
Arvind,
Yeah.
you okay?
Yeah.
After the fight?
Oh wait, how did it happen? No, I told you something.
But you told me that he was into a fight and then broke his hand, yes?
Oh no.
What did you say? You didn't tell me.
I was talking to someone. No, you started a fight club. So like, I don't know what you did, bro.
Yeah, what happened?
Then you had to go over there. I was playing soccer. Yeah. He started playing soccer. And then you tried to do blue net. You jammed.
Huh? What? Did you just pull down something from a certain? You can write.
Yeah, I'll stay.
Yeah, so what you do is reducing balance method is with the carrying value times by the rate is the depreciation expense. So carrying value times the depreciation rate. If it is full year, yes, otherwise proportionate we have to calculate. If it is 6 months, 6 over 2. Yeah.
So you just do 30%.
On the carrying, yes, that's why that. If it is, let's say 6 months,
Yeah.
6 over 12. If it is 4 months, 4 over 12.
Okay.
Proportionately.
So, right. So here it's 3 months. Guys, so you yes, can. Times. Should have it for.
So then it goes into 4 times through 800, 800 times 0.3, how much? 240. You don't need the calculator, yes.
Huh?
Yeah, so when we don't all the time. No. How do you calculate the depreciation on the argument on that? Suppose. What's my list? You did not get it, just get it, so. Just put out, how do you calculate the depreciation? Carrying those times by the depreciation. You know, like the code. Carrying a load is a cost, cost, you think the way I can position. Right, which is in this case, if it was straight line method, then you are straight line method, we are calculating on the cost. On the historical cost, it doesn't change. It's not going to change. But the reducing balance, because is going to change. So why we always use the carrying cost, which also oh no. So this one transfer. Oh, the rest and the pending cost whatever if it is like full deal as it is, otherwise if it is proportionately, let's say if it is 4 months, 4 to this one times by 30%. Yeah, this times by 30%. If it's 4 months, 6 months, it's all the work which is for the balance. Make sense? Hold on.
I think the next is. Oh, you want to list?
What?
Not related. Right, it's the ones given in the. 31. And the day before Saturday. 31st. That's how you saw. No. Oh. No. Yeah. No, you don't record balance. Oh, you just close it off. There'll be no balance at the end.
How do you get this amount?
That's your next thing first, so let's start, not go from. There you finish. You go to someone who was 60. You stay first to someone. It is to pay.
Yeah, you use that for the reducing balance method. What do you calculate? What do you or we calculate the population? Carrying value, which is how much is it? Yeah, which is how much? What's the carrying value?
So.
That 800?
Yeah.
You sure? Or is this?
Yeah.
Which one?
46.
36,000 is the carrying value. What is this? That's
Such
it.
is our cost.
Yeah, so this is the historical cost.
It's
It's not, that's is this, which is. What is that 200? What do you call it? Carrying, that's the carrying.
Oh, wait, is it?
But then, on making that big satisfied, I'm going to show you can get short. Then I was in school.
Yeah, so.
If they include just, we probably, but nowadays, yeah.
Wait. Maybe it's two. That's into GS2. Yeah, that's the one. This is like.
For this one? Yeah, remember I told you. So always we have to add GST. Even if it was not mentioned.
Shit, don't.
I would say add GST. You always line to this one.
This right, sir.
Done?
Yeah.
Okay, give me a minute.
We get 3. What do you have? Get 3 to 6 7. 3 to 6 7.
Oh, the man. Hold on, guys. Shall we take it including GST?
Yeah.
Yeah?
Well.
2970, shall we take it including GST? Yeah, please change. Oh, we can take either way.
Excluded any variable.
Sorry?
I didn't include GST.
You did including GST. Yeah. So this one, 2970. Shall you write it with GST? Yeah, we'll say this is with GST, including. It's a loss?
Yeah.
Okay. Let's get fine.
There's innovations.
This one, 2960 Pro. 2970 is. Huh? 2960. And GST part is also. 2673, no. Your calculation. Give me that this wrong. Yeah, that's good. Then what did you forget on? You want to undo this. You know the other thing about this report is depreciation. This is a depreciation expense. In depreciation expense, you are getting it's
33.
and you are creating the accumulated depreciation. But you don't have it. You're not worried about simply so wait, only open it, but that's the way now. So accumulated is an expensive, which has like credit lines. Usually assets we have a debit. Yes. We have a debit. But this one, we have a credit balance. So I feel the rate is
Something so much.
that does December. That means I feel January 1st, 26, January 1st, January 26.
They don't do that.
Do 21.
I have multiple.
Which is the what is it? Actually, why you want to give me a violence to the calendar? Bro. Then you do these 2 4 you are going to maybe this next one is a credit here. Right?
We have one.
They won't take away mask and they won't give extra lines. Yeah. They give extra lines.
What?
They give extra lines. I mean, depreciation of depreciation expense.
Actually, you said 47,000. 2,700.
Yeah, that's good. This is not. Oh, this is not. This not be
Yeah, that's March. So the plan depreciation is 2 months. So it will not be calculated important. That's fine.
Yeah, mistakenly.
Well, we don't see. Why am I not here? Oh, right. Okay.
Yeah.
Only a fair March thing, but then we no. No, I know. I agree. It's only a fair March difference.
Yes, sir. Of this.
That's the. It was actually but.
Yeah, you learning the carry.
So no, but we off
Carrying.
Okay.
Okay. Oh,
Yeah,
yeah, that's fine.
It's lines that seems.
But depreciate accumulate, please, no.
It's not that.
No, that's what it's sitting here. Let's go.
Let's look at the loss here.
Shall we do it, guys?
Yeah, 1 minute.
1 minute?
Sure.
2 minutes? We'll do part A.
This is what. Wait.
Okay, guys, calculate the carrying value.
The general you combine the everything, just be sorry. You have to combine.
What? What do you mean? right one just goes to the bank. So no bank, the fittings.
Do multiple times. So
Yeah,
you're combining with,
you can combine if you want, but we don't do it in your study design. We can write actually only how many? 1, 2, 3, 4, about 4, 5. From 5, yeah, from 5 of them we can finish it off. Like we can say van, I mean whichever it is, van, accumulated, bank, disposal, profit and loss. So in 5 we can finish it off.
wouldn't the disposal would balance, right? So that would.
Yeah, sorry, the disposal wouldn't be there. Yeah. GST. Okay, guys, did you get the part A? Yeah. How do you calculate the depreciation for this? You are getting the carrying value, which is 3,200 times by. Yeah, everyone is okay with 200. Yes. How do you take it? 36,000. Take away 32,800, which is equal to 3,200. This one is times by 30/100 times by 3/12. Why 3/12? Because it's 3 months. This is sold on 31st March 26. Right? Which we are getting 240. Yes. Yeah, 240. Then is the 240 answer? Is 240 the answer? No. Then for 240 you had to add, what is it? 32,800, which is 33,040. From this 33,040 you have to subtract. I mean, this one should be subtracted from 36,000, which is 2,960. Yes. Right. Then if you're doing the ledger accounts, guys, this 240, what do you do? Fittings, you have January 1st, 26, yes, balance. How much? 36.
Why is in January?
Why? Because opening balance is as at January, yes.
Doing year.
I mean, regardless, opening balance is going to be the 1st of Jan. Right? This one also January 1st, 26 accumulated. So you have a credit balance. How much? 32,800. Then you are adding that 240 here from basically March 31st, right? Saying not accumulation, sorry, depreciation expense of, what is it? Fittings. Yep, 240.
I did the balance like on March like this, and I just put them like together.
No, this is how you have to put it. Okay, so you are going to 33,040. 33,040, yes. You are going to transfer it to March 31st, 26, disposal of fittings, yes. Yep. So you are debiting here, crediting the disposal. What's the date, guys? March 31st, yes. Saying accumulated depreciation of fittings. 33,040. Okay. Right. You want to carry on or you want to take a break?
Just answer the question.
Okay, guys. Now, any questions up to now? Okay. Right. Then, guys, part B, record the receipt 96. Right. So please make sure it is with GST, guys. Receipt 96. Right. So what's the first entry? Disposal of fittings. What's the date? 31st, 26. What is it? Fittings, yes. Fittings. No, I'm sorry. The other way. Disposal of fittings. $36,000. And you credit the fittings. What's the next entry? Accumulated. Accumulated, you are debiting. $33,040. 33,040. Disposal of fittings. Right. Then we are crediting, we are debiting the bank, yes? 2970 and credit disposal of fittings 2700. GST clearing 270. Right. Then, right. Now the question: have we made a profit or a loss? Loss. How much? Yes. Have we made a profit or a loss? Yes. Yeah. How do we calculate it, guys? Profit or a loss? Yeah. Look at this. How much is the value of the? How much is the cost of the fittings? Yeah, 36,000. Yes. Is the cost accumulated? 33,040. So how much is the value of the fittings? 2960, which we calculated in part A. 2960 worth of something is sold for how much? 2,700. So that means 260 loss.
Yes.
Then what do? You debit the loss on disposal of fittings. Yep. 270. No, 260. And you credit the disposal. Right. So what's the narration, guys? Cash sale of fittings. Receipt 96. Right. You guys are okay to do the ledger account? Yep. So firstly we credit the fittings 36,000, saying disposal of fittings. What is the date? March 31st, 26. And then you debit the disposal. March 31st, 26 from fittings. Okay. Then we have bank 2,700. Then this side is great, isn't it? So 36,000 is greater. 36,000. And then this is going to the loss. So 60. Saying what is it? Disposal of fittings. And then this one. We can send it to the P&L summary. Given that this is the last day of the period, okay? Does it say?
I don't see it.
It doesn't necessarily say it, yes? Yeah. We may or we may not send it to P&L summary, but not sure about the date. Regardless, we are sending it to P&L summary, right? Whatever the date it is, the last day of the period. Right. Okay, guys, so that's the end of the ledger accounts. Any questions? How do you find it? All right. Okay, you want to try part Part D, of course, I'll give you. Oh no, part D we haven't done it, so you can't do it. So don't worry about part D. Part E and F you can do.
We have a break.
Yeah.
Yeah, I have one.
How long?
Half an hour.
No, not 10. Half an hour, then we are going to finish at 8. Yeah, take it for 5 minutes, okay? Come after 5 minutes, I can't be calling you. Okay, guys. Part first of all, yes. Part D is okay. No, part D. We didn't do. No, part D we can't do it right now because I have to do a little bit of theory. Right. Income statement for the quarter ended. Yep. Where do we report it, guys? Under? Yeah. Less other expenses. Right. Yeah. So loss on disposal of, what is it? Fittings, yes. 260. Okay. What else? Is that all? Yeah, they are asking only the profit or loss. Otherwise, what else could we have reported here?
Depreciation.
Depreciation, yes. Yeah, depreciation expense. Yeah. Yeah. So we could have reported the depreciation as well, yes. Right. Now, next one, calculate the accumulated depreciation to model the effect on profit or loss on disposal of fittings if they were sold, right? For 4,000 on 30th April, right? So then, guys, what would have been the depreciation on 30th April? Yep. If it was sold on 30th April, then what do? What's your accumulated depreciation? Sorry, before accumulated, we had to calculate the depreciation expense. Yeah. So you have carrying value. So how do you calculate the depreciation expense, guys? Carrying value times by the depreciation rate, yes? Okay. So sold on 30th April. So how much is the carrying value, guys? The 200 times by depreciation rate times by how many months? 4/12. Yep. 320. Yep. Then what's the accumulated depreciation? Accumulated depreciation would have been 3,200, sorry, 20, how much? 3,800, yes? Sorry? Yeah, that's what I said. Because they're asking only the loss, profit or loss. Yep. Which is 33. 1120, yes. Sorry, 33,110. 120. Yep. Okay, so that means what is the carrying value, guys, as of this date? Carrying value equals 36,000 take away 33,120, which is
2,980.
2,880, and this one is sold for how much?
4,000.
4,000. So meaning, yep, 4,000 take away 2,880, which is 1,120 profit. Right? Right. Okay, guys. Then what about if it was sold? How much? 2,720 on 30th June 26. Then what will happen? So if sold on June 30th. Yep. So then what will happen? 3,200 times by 30% times by how many months then? 6/12, yes? Yep. 6/12. So meaning how much is the depreciation? Huh? 480. Right? 160 times 3, 480. So then 480, what do we do? You are going to add it with 32,800. So total accumulated depreciation will be 33,280, yes? Right. Then how much is the carrying value? Carrying value will be 36,000 take away 33,280, which is 2,720. Then selling price is also 2,720, meaning neither profit nor loss, 0. Neither profit nor loss. Right. Any questions? Right. Okay, now guys, we'll have to do a small theory part. Everyone is okay with this? Any questions? Yeah, please go to page number 4. Right. Now, Did we calculate the profit or loss on the disposal?
Yeah.
Yeah. Now, what are the reasons? Okay, we write firstly, take down. Under depreciation. Sorry? Superseded. Right. And reasons for loss, sorry, reasons for profit on disposal.
What if you like update your asset in between?
Sorry?
What if you like update your asset?
Update to asset. Yes, then you will make depending with your selling price, yeah, you will make a profit or loss. Then other factors, like there may be one or more factors that is affecting the profit or loss. So if you upgrade it, yes, you can sell it for a profit, yes, because it is in good condition or in high demand. Okay.
If you upgrade it, does that change the carrying value?
Carrying value, upgrade it, carrying value will be anyway change with the depreciation. So if you upgrade it, what do? You are there with us when we were doing cost of non-current asset?
Yeah.
Yes. Remember we said that we are updating it. Now we are modifying it. So then what will happen? So your historical cost will change, right? And then next time when you depreciate it, yeah, depreciation also will change. So that anyway, the carrying value will be affected.
What if you modify it like way like after, like a year later?
That's fine. Still, you are going to add it
So
to the cost. Doesn't matter. So you add into the cost means you are going to depreciate subsequently.
I put it back today. Yeah, like a year later. I mean, if I put it back today, like 5,000. A year later, I modify it. Like the expenses were like 500. So then the historical cost of the van would be 500.
Yep. and then your depreciation also will change accordingly. Yeah. Okay, guys, please read this one. Okay. Now, firstly, the harder part of this one is under and over depreciation, which I'll explain you later. So before that, firstly, why do you think our asset or disposal will make a loss? Apart from the first reason, what is it? Asset being damaged. So if it is in damage, of course, resaleable value will be lower. Of course, we will get less selling price. So we will sell it at a loss. Yes. Next one, we have an outdated or a version that is superseded by later versions, later models. So then the demand for our asset will be low. Yes, right. So basically, that is what happens, right? Okay. Next one, guys. Again, we accept the first one. What are the reasons for profit? So our asset was in high demand, right? So when the demand increases, of course, what happens? Price will increase. Yes. Otherwise, the supply is lower. What will that price will increase? Like crude oil now. Yes, like oil. Yeah, so supply is less. Yes, demand is the same as before. Supply is less. Yes. Okay. So restriction. Yes, restricted supply. So then, so the price will go up. Right. So asset was in good condition and asset was in high demand. So we can make a profit. Okay. So those are the ways. Of course, Then the other story, guys, under and over depreciation. Now, for this one, now already my method, I don't memorize, I remember logically. So how do I remember this logically? Like this. Now, guys, question. Right. So, how do we calculate the profit or loss on disposal? Right? Profit or loss on disposal, yes.
Selling price.
Yeah, selling price you are. Yes. Comparing it what?
So,
No.
hang on.
You compare it with the carrying value, yes. You compare this one, selling price and the carrying value, yes. Selling price, let's say we can't change. Carrying value is the one we can change. So let's say firstly we'll go through with one thing. Let's take one thing at a time. Maybe loss on a disposal, right? Loss. Where would we make a loss, guys? Selling price is what? Greater than or lower than the carrying value? Lower than the carrying value. Yes, that means carrying value is higher. Right? How come the carrying value is higher? What are the reasons for carrying value? Carrying value is, yes, carrying value, what are the reasons? Cost and the historical cost, take away accumulated depreciation. Right? So we need to have a higher carry. Now look at this one, guys. Okay, very important. We need to have a higher, if we need to have a higher carrying value, what do you think we have done? We can't change the historical cost, but accumulated depreciation would have been lower. So accumulated depreciation should have been low. Now, to get the low accumulated depreciation, what should we do? Low accumulated depreciation. That means our depreciation expense should have been, yes, depreciation expense should have been
Wait, oh,
low, yes. Now, how do we calculate the depreciation expense? Using the straight line method. Yes, HC minus RV divided by life. Okay, now tell me, to have what did we say? To have a lower depreciation, yes. Now think about the historical, without the historical cost, think about the RV and life. Do you think that RV, we need to have a higher one or lower one? Higher, yes. If we have a higher numerator, I mean, remember this is taken away, right? This one should have been higher. Otherwise, life should have been denominator lower. This is also higher. So if you increase them, what will happen? Your depreciation expense will be lower, meaning your accumulated depreciation is lower, meaning your carrying value will be higher. That's how I remember. I don't memorize anything.
When you memorize the formulas.
No, formula also I didn't ask you to memorize. Remember, it was common sense. You purchase a computer for 2,000, you sell it for 500 after 5 years, right? Then how do you calculate the depreciation per annum? You don't need to remember memorize formulas. Common sense. Okay. Yeah. Okay, guys. So basically, remember, but if you can't figure out this one, yeah, of course, you'll have to memorize this one. Right? What you do, basically, we are overstating residual value and life. As a result, we will end up in lower depreciation expense, then lower accumulated depreciation, then higher carrying value, meaning we are going to make a loss because we have depreciated less, under depreciation. Under depreciation is the reason, right? Under depreciation by overstating the residual and useful life. Otherwise, you don't have to go that far to figure out the under depreciation. Why? Because we know, guys, right? Our carrying value would have been higher to get loss. So why the carrying value is higher is our depreciation is lower, meaning we have under depreciated. Then for the profit, opposite, over depreciated. Why? We have depreciated too much by understating the residual and life, so that we have depreciated too much, right? So that our accumulated depreciation is higher, meaning carrying value is lower, so that we are making a profit. Okay, any questions? Great. Okay, do you want to answer part D or shall I give you the answer? Suggest 2 reasons for the profit or loss on disposal. Yeah, what are the 2 reasons? So out of the 3 I gave you, you can say any 2. Yeah, what are those? Asset being damaged. What else? Under or depreciation, what is it?
Depreciation, even though it's the like raise.
Sorry? No. You can't say like that. Under depreciation because of the asset of the what is it fittings, yes? Due to
Wait, do you decide the depreciation expense?
Sorry?
Do you decide like the depreciation expense?
Yes. Remember we said that it is based on the
Okay.
no, not market value. Depreciation is based on those two conditions. What is it? Residual value and the life, which we are estimating. Yep. So which can change, which is
Based on market value.
yes, and also like based on our experience, we have determined the residual value and the useful life, which is determining again the depreciation expense. So technically it is biased. Yes.
Um, assumptions for this.
For this one? No.
No,
Not for this one. No. I mean, disposal we can, but not for this question. It depends on the question. Okay, guys, we have two options. Either we can do the second method of disposal, otherwise we can do another question. If we do second method, then we need to have, I mean, we have to do another question as well. Yes. What do you think? You want to do second or another question? Question? What? Yeah, question number 3. Yeah, general journal. Don't worry about general journal, guys. Just do the ledger accounts. Yeah, general journal. It's not there. Right. Now, first of all, when you do a question like this, you have to look for something. What is it? Make sure. Yeah, so your balance day. What's the balance day, guys? 30th June each year. Okay?
Yeah.
Why?
No.
You didn't pick it before?
No.
That means, yeah. All right. So then business purchase the storage equipment on 1st January 24 for 8,000 plus GST. Right? Has an estimated life of 5 years, and then it will be sold for 1,000. Meaning, yep. How much is the depreciation, guys? Annual depreciation? 1,400. Because how do we calculate? What's the formula? Annual depreciation expense is equal to yes, historical cost, take away residual value divided by the life. Yes. So historical cost is how much? 8,000. Residual value is 1,000 divided by 5, which is 1,400. Yes. Right. Then when do we purchase it? January 1st, 24. So how much is it? 8,000. Same. Bam. Okay. Then firstly, it's depreciation will occur when? Before that, if you want, we can balance it. When are we going to balance this? That is June. Yep. June 30th, 24, yes. We'll say balance here, 8,000, and opening balance also will be 8,000. As of July 1st, 24, balance. So this is the normal way of balancing, right? Even if you don't know depreciation, still you can do this one. Okay, right. Then, so how much is the depreciation for the first period, guys? How many months? Yeah, how many months? Yes, 6 months, which is, what's the depreciation then?
Is that January or June?
Sorry?
The balance is that January and June.
January. Sorry,
On debit side.
no, on the July.
Right, July.
July, this one is July, okay? Right, then accumulated depreciation, guys, what is the thing? Or before the depreciation expense? Yeah. What is the double entry for 700? Everyone is okay with 700? Yeah. Annual is 1400 for 6 months, 700. You divide by 2, yes. What's the double entry? 700, June 30th, 24, saying accumulated depreciation equipment. Okay. So you debit here and credit here. What's the date? June 30th, 24, yes. Depreciation expense or depreciation of equipment, okay? Then what do we do with the depreciation, guys? You transfer it to, yes, June 30th, what do you do? Transfer it to P&L summary. 700, meaning you can balance this one off. There's nothing left. Right. Next one. We have to balance the accumulated depreciation. So June 30th, 24 balance 700. And then opening balance is July 1st, 24, 700. Right. Then what happens to the next period, guys? Again, 8,000 will be carried forward. Yes, 8,000 will be carried forward. So which is 8,000 here, 8,000 here. June 30th, 20. What is it? June 30th, 20. What? June 30th, 25. Then opening balance is July 1st, 25. 8,000. Then how much is the depreciation for the next year, guys? Yeah, next year's depreciation, sorry. 1,500, 1,400, right? So 1,400, what do you do? You debit the, yep, June 30th, 25, saying accumulated depreciation equipment. 1,400, then it's a matter of balancing 2,100, 2,100. This one is saying, what is it? Depreciation equipment.
Unless one was a mistake, relaxing this.
June 30th, 25, closing balance 2,100.
Okay. Okay. Yeah, you get one.
Okay, guys, then what do you do for the depreciation of equipment? You again transfer it to June 30, 25, transfer it to P&L summary. 1400, yes. Wait,
21,000.
sorry,
Induction made on debit side, you put 21,000.
2100. 21, this one.
Suppose.
2100, yes. Okay. Then, guys, what is happening? We are eventually coming to when? 26th, yes. Owner decided to sell the equipment for 4500 cash, then plus GST for that, right? Then what do we do? Yep, what do we do? Depreciate first. How much is the depreciation? Again, 1400. June 30th, 26. Saying accumulated depreciation, equipment, right? Then you debit here and credit the accumulated. Oh no, hold on. I haven't written the balance. This one is July 1st, 25 balance. Which is 26, no, 1400, 2100. And then I'm adding 1400. Right? Which is June 30th, 26, saying depreciation expense, depreciation of equipment. Then this one we can close. How much? 3500. 3500, yes. Right. Then what happens? Yeah, so we are transferring it to the disposal list. Which date? June 30th, 26, disposal of equipment.
Wait, you still have to transfer one of the.
Sorry?
Oh, no, some.
So you can transfer this one to P&L summary. P&L summary. 1400. Okay, guys. Then disposal. What would we do? Yeah. So we transfer firstly the equipment. 8,000. Yep.
If you do that, there wouldn't be any for all those.
Yeah. Because why?
Part C says explain why the conflict loss.
Yeah. So then loss identifier. So then we have to say neither. Okay. Then what is it? June. I mean, if you want to change it, yeah, we'll change it. If you want a profit or loss, we can change. What do you think?
I think the answer like
No, I mean, either way, we can change it answer if you want. June 30th, 26, we transfer it to the disposal of equipment. Yes. Then we are transferring it here. 8,000. June 30th, 26. Equipment. 8,000 and then June 30th, 26. Accumulated depreciation, which is how much? 30, 500. And then we are selling it for how much, guys? 4,500. Yeah. 4,500 include excluding GST. So that means how much? 4,500 we are debiting, sorry, crediting here. Debit bank, credit here. So technically, what will happen? Neither profit nor loss. Yeah. So is this hard?
Kind of.
Yeah. No. Kind of.
Just some
Yeah.
annoying parts.
Hmm?
Just some annoying parts.
Just that?
Just some annoying parts like the repeated depreciation.
Yes. So that's the thing. So you will be expected to do this. Okay. Right. Any questions, guys? Yeah. The other part we'll do later, next time. So we'll see you on Friday. What time? 9:30? 9:30.
Whatever. Hey, look at you.
Okay, guys. Then see you on Friday morning.